Hi, Shannon Grimm with Shannon Grimm and Partners here at Howard Hanna with Mike Stanley. And today we're also joined by Brian Hitchcock from First Financial.
Woo! Love the reception.
He's only clapping because before we got on, we were talking about burying his body somewhere, and Brian said he would help me.
Yep.
So he's trying to cheer Brian on.
I don't want you to hurt your back or your knee or anything moving me, so he can help. It'll be great.
I assumed you'd be in pieces by then, but okay.
But Brian is our condo specialist, I like to call him. So if anyone is even considering a condo, that's who you should go to for a loan. Even if you end up not getting a condo, you should still start with Brian, otherwise you're going to regret it later.
I agree.
And this podcast is going to be about all the reasons why you're going to regret that later if you don't go with him. So there's some new changes coming up that the feds are making.
Yes.
And some different things are going to make it a little bit harder to get a condo through a conventional loan process. And unfortunately, our MLS doesn't do us any favors because there is no option for a portfolio loan to be selected as the financing type.
No, and most listing agents truly don't know whether the condo complex is going to be warrantable or non-warrantable. Oftentimes they'll say it's non-warrantable, and I do a warrantable loan on it.
Oftentimes they will tell me, sure, your client can buy a home warranty. Why couldn't they?
Don't
Because
know.
that has nothing to do with what I'm asking.
No, that is not the question.
I was gonna say I know I've done 2 transactions with you where they thought it wasn't warrantable, and it was
And it
actually.
was.
So,
Absolutely.
and I questioned it too because I was like, man, they have a cap on rental units in there. I was like, there's a lot of things leading me to believe that this might be warrantable. So,
Yeah.
But my rule of thumb is you always assume it's non-warrantable until you discover otherwise.
Yep. Always have an
So,
option to buy whether it
Always
is or
approach
isn't.
it.
Yep.
Yep, so that's kind of how I've always looked at condos, and it's not failed me yet.
Excellent. That's great.
But anyhow, so I'm sure people are wondering what is the difference between warrantable and non-warrantable. It's about 15%, typically.
What's that?
The difference between warrantable and non-warrantable is about 15%.
That you have to put down?
Yes.
No, not with my loans.
Not
with
you.
my loans.
Not with you, but if they make a mistake and go to a different lender
Yes.
who isn't as skilled at doing the non-warrantable, it is a difference of 15%, which they wouldn't find out until about 7 days prior to closing.
If they work with a bad lender, they won't find out until very near closing, or sometimes
Well,
the day of.
Sometimes the lender can't help it either because you have to get the condo questionnaire filled out. And those HOAs and stuff have all this red tape to prevent from getting those condo questionnaires sent back quickly. So then you end up kind of pushing things. So that's why I just assume that they're all non-warrantable. I'm just going to start calling them portfolio loan products.
Yes.
So, because people, when we say it's non-warrantable, they think that has to do with the structure of the home or something.
Yes.
And what we used to call them was conventional and non-conventional.
Yeah, or conforming and non-conforming.
Conforming and non-conforming. But apparently that meant something different
Loan
to
size. Yeah,
the
that's the loan
lenders,
size.
Right. So now people just get completely confused. So I'm just going to start saying that condos all need portfolio loans.
Yes, it's a good safe assumption right off the bat is you're going to need a portfolio loan as a backup if your conventional loan doesn't work.
Right.
Easy answer. And people are generally receptive to that if they start right. I have a lot of buyers that come to me that say, oh, I'm in contract, I went into contract, it's been 3.5 weeks, my lender just called me and said this condo complex is horrible and I shouldn't buy in it because it's non-warrantable.
That's not what that means.
And that is not what it means. So once they talk to me, I usually calm them down and make them understand that there are loans that are good loans for everybody in that complex. You just need to know the right lender.
Yeah, and there are so many different reasons why a condo would require a portfolio product.
Yes.
So it has nothing to do with how it's built or anything else.
Nothing to do with the structure typically.
No.
Although sometimes.
Sometimes. Yes, we do know of a community where you were the only one who could get the loans done in that community
Yes.
in Dublin because all of their back porches fell off, their back decks fell off.
Everybody likes a balcony on their car.
I mean, why wouldn't you?
why would it's a great place to store people, I
Yeah.
guess.
The view up
Especially
here
when
is
you were
great.
sitting on it. Yeah, the poor people that were sitting on it when they fell on top of
yes.
the So that was a lot of fun.
But yeah, I mean, you just had a listing, and the buyer, was not using Brian, and
I tried.
you tried, but they were spooked because their agent did not
I tell them what it meant to be a non-warrantable.
Non-warrantable, yeah.
Didn't explain to them what that meant. He tried to get them to switch lenders without telling them why.
Right. It pays to be honest and knowledgeable, right?
But you should, if you're talking condos to someone, you should have the conversation up front. It shouldn't be, so like my whole goal is to be proactive in any conversation, not reactive.
Yes.
So when you're dealing with someone's emotional purchase and the largest investment they'll have, you need to be proactive, not reactive. Because then you're not the professional.
Correct. You have the knowledge to share with them, right? You're the person they trust to help them. You can't just ignore the fact that it might be non-warrantable.
And I've been selling condos for 30 years, and if I don't know condos, then I got a problem. So I need to have that conversation. And that's what I do with my agents, too. The first thing I teach my agents is new construction and condos. Because I'd say 70% of agents don't understand one or both.
Correct. That might be a low number. It might be
I
higher
was
than
gonna
that.
go higher, but I went down low.
I was just saying, it's higher than that.
Hey, when I can't get an agent to understand that her third-story condo isn't a ranch, I mean, all
Oh gosh, yeah, I had a few of those.
I'm like, if I have to walk up 2 flights of stairs, it's not a ranch.
That's not a ranch. Although there are no stairs in the condo.
Right.
Still doesn't make it a ranch.
That does not make it a ranch.
I rescued a deal, it was 4 condos, and she wanted to buy 4 condos, and the agent kept saying, there are 4 condos, she wants to buy all 4 of them. And I said, all 4 condos? And she goes, yeah, they're all in one building. I'm like, that's a weird purchase. Are there other condos? And she goes, no, just that one building. I pulled it up, and it was a 4-unit property. So that is exemplary of the knowledge people have about condos in this industry. Not a lot.
Yeah.
It's true.
That
It's
is
sad.
fantastic. And not saying that I'm better than anyone else or more knowledgeable than anyone else, but I definitely have specialties.
You
right?
are experienced
So-
in condos.
In new construction condos even. So,
I love it.
yes.
Those are also difficult for their own reasons.
Yes, that's why I like it when they're purchasing those in cash.
I don't like those people.
I knew
I
it.
tell them to use other people's money, not your own
Condo
money.
and cash is a great match, but otherwise they should go to you, or it ends up not going through.
Yeah, let's talk about some of the reasons why they don't go through. I mean, and the biggest reason that I see is people will go to buy a condo in a complex that has what's called a single entity problem.
Mm-hmm.
It happens a lot. It is so easy to figure out. You can figure it out on day 1 of the loan. They call me up, they say, hey, I'm in contract on this property. I pull that property up, I pull the condo association, the whole association up and look at every owner. If I see the same name over and over and over, you have a single entity problem. It's that quick and easy. Other lenders wait till they get the condo questionnaire, maybe 2 weeks later, maybe 3 weeks later, and then they go,
sometimes you just know the community too, because
Correct.
you've done so many in there. I can call you and say, hey, I've got a buyer who wants to be in this community, what is it?
right?
And you can say, yeah, I'm familiar with that one, it's gonna be a portfolio.
We just did a loan in there, it's gonna be warrantable.
Right.
Like, I generally will know on most complexes. Sometimes when they're outside the city or somewhere far away, I have to do a little more research, but it's pretty easy for me to tell right from the beginning, at least, if we have a good chance.
And it's probably a good time to mention that not all loan officers are created equal either. So not even within their own company. So there is another lender within your company who will flat just tell people he is the condo guy.
I love it.
So, and she's right.
It's because I solved her problem on the last condo and made it warrantable.
Yes, and whenever I find out anyone from your bank is on a condo and having problems, it's like, call Brian Hitchcock.
I appreciate it so much.
I'm sure you do. You appreciate working for free.
I do not mind. I do not mind at all. It's part of my job. Talk about condos all day, every day, so it comes naturally. So the single entity is a big problem. The other problem that we see a lot of times is reserves. If they just don't have the money in reserves that are required by Fannie Mae and Freddie Mac, then they don't get a Fannie Mae and Freddie Mac loan. Makes them non-warrantable. We'll do that on our portfolio, so we have a backup plan. And that takes getting the condo questionnaire to know what their reserves are, because I can't see their financials online anywhere. They don't make that public to me.
So the Freddie Mac and the Freddie Mae.
Fannie Mae, Freddie
Fannie
Mac.
Mae and
There
Freddie
we go.
Mac.
I'm
You
like,
had
I know I
it.
always
You
get
almost
it.
had it.
I
You can
almost
just say
had it.
Fannie Freddie, it's fine.
So Fannie and Freddie. So people assume if it goes with the Freddie and dang it, you know.
Freddie and Fannie.
Freddie and
Yes,
Fannie.
if it follows those guidelines, that means it's FHA, but that's not what
That
that
is
means.
absolutely not what that means.
But that's what people think.
People think a
And-
lot of things.
And I would say less than 3% of all condos go FHA or VA.
So if you were to pull up the list, I can pull it up by any zip code. I can tell you in 2 minutes how many condos in any given zip code in the United States is warrantable. And if I pulled up 10 zip codes in Franklin County, I would say there would be 9 with no warrantable condos.
Yeah. So
Because, or no FHA
no
approved
FHA,
condos.
Right.
They all let it expire in 2011. The rules got really tough. Things got really hard, and there were a lot more buyers
It's
out there using
expensive.
conventional. Yes.
It's expensive to get recertified. So I always tell people, especially if they want FHA or VA, you're not buying the condo.
Probably not.
Yeah,
Or
it's just
you're
rare.
only shopping where I tell you can shop.
Right.
That's
It's
it.
really rare. And,
Well, it's near impossible to get a spot done now, correct?
oh,
they-
yeah.
The liability is all on the bank. If I
Yeah.
do a spot approval, then I approve the whole thing as spot, and any other lender that uses it, I'm responsible for their loan. So I'm not going to
So
do
no
it.
one
Yeah.
does
Yeah.
Yeah, it took me, I think, 90 days on one that we did at Lakes of Cheshire, and that was when it came out, and they're like, oh, yeah, you can get a spot approval. No, you can't.
It's
Because
It's
after
too
90
difficult.
days, they said you can't do it.
right.
So, but,
Because nobody wants that liability. If I have to take responsibility for everybody else's buyer, I'm not doing it.
well, just like when they were having issues in, what was it, Miami with the condos falling.
Oh yeah.
Then no one here wanted to fill out a condo questionnaire.
Right.
Because it basically makes you attest to the fact that you've been through every unit and know whether or not it's in good shape.
Yeah, they changed that a little bit
Crazy.
and tweaked it to say that I am not aware of any deficiencies.
Yes.
And if I'm aware of them, I have to tell you. But if I'm not aware of them, then I can say no, I'm not aware. It's gotten a little bit easier. I think they're going to make it even easier in the future, which is good. Most of the time, you can tell if there are a lot of physical deficiencies at a condo complex because you're going to
Okay.
be out there touring. You
Oh
know?
yeah.
These stairs are falling down. This is a physical deficiency.
The roof blew off the backside of the building.
Oops.
It's not there.
Yeah. So a lot of times you'll see that if you have a good inspector, they'll find things too. But for the most part, they have to answer that question truthfully, and I assume most of them do. We assume. So I just want to talk about the first change that's coming up because it is not waiting for next year to come up. It starts August 3rd, and this is
Oh, wow.
huge, right? So because August is right around the corner,
Less than 2 months.
and if there are big lenders that are getting lead time on these things that don't want to sell a loan and have it bought back, then they might start doing this earlier than August 3rd. But as of August 3rd, the limited review is gone. And that is a huge impact on our market. Fannie Mae put out information that said 40% of condos are done on limited review. Other companies put out information that said up to 65% of condos are done on limited review. And all limited review does is it takes away a lot of those requirements that we have to ask on the condo questionnaire. So if I can remove those things, I can do a lot more loans. And it's easier for me to do those loans. Once I have to ask all of those questions to all of the condos, many of them are going to fall out and be non-warrantable. Huge impact immediately, August 3rd. That's right now when you're shopping for condos.
Nice.
It's a big deal.
And I did not know that one was coming.
It's a big one. So we have portfolio loans that can do 30-year fixed rate money in there. You can do as little as 3% down in there. You can do as little as 0% down in there. You can do 5% down in there. All with non-warrantable condos. So once that
your
limited
interest
review,
rates aren't sky high either, because like
they are not.
most lenders, if they are able to do a portfolio loan, then your interest rate's going to be much higher.
You have a higher rate, you have an ARM instead of a fixed, an adjustable rate instead of a fixed, and you are usually punished in some way.
Yeah, like at one point, someone said, okay, just find out what's closed in a week. You have to go portfolio. Your interest rate's now going to be like 9.7, and that was like 6 years ago.
I think
when
I had
things
one
were-
that I think I had one like that. That it was almost it was like 10 point something. It was almost
Yeah.
11%, and they were like, "Oh, and your down payment, we need more." I'm like,
It's a
"Oh,
difference of 15%.
oh my gosh."
So compare a conventional buyer, normal first-time buyers putting 5% down on a house, and they go, I want to look at condos. I have 5% to put down on a condo too. My credit score is 720, and I've got a conventional loan. They go to get a condo, and it turns out to be non-warrantable. I'm going to take them from that 5% down loan, warrantable, 30-year fixed, to a 30-year fixed, 3% down, and I'm going to drop their MI off. Did their payment change by 1 penny from a conventional
It
loan?
might have gotten better.
It might have gotten better is the answer.
I was gonna say you dropped their mortgage insurance off. That's
Yeah.
insane.
Yep, 680 credit scores, even bigger impact. I'm going to put you on my portfolio loan even if it is a warrantable condo complex
That's crazy.
because it's a better product for you.
That's
It's
amazing.
It's huge.
That's why if anyone's looking at a condo, they should go to you.
I love it. We can't say it enough times, really.
We really can't. We really can't.
The one carve out on that rule is 10 units or less. So if you have a little tiny complex, maybe 4, maybe 8, 10, we don't have to worry about it. We can still do a limited review on them because they really don't have meetings like regular places and they don't have all of the paperwork. But if it's over 10, we're doing a full review.
Wow.
Okay.
Crazy. So that's an impact right away. I know you said all the other ones are pushed out to January. There is one
That's
in
what I heard today. That's why I was like, oh, I'm glad Brian's coming in, so we'll verify this.
there's one in July. So the next change, and it's actually kind of a good change, is the insurance requirements are changing to make it slightly easier to be warrantable. So that's a good thing, right?
Okay, yeah, because that's the one that would always trip me up,
Yes.
was the insurance. Like, they would say that the HOA didn't have enough insurance.
Yes.
That was always a problem.
So they used to have, HOAs would have coverage on your roof, and they wanted to do actual cash value of your roof. That's what we'll pay in insurance for the roof. And Fannie Mae and Freddie Mac said, no, you have to have replacement cost value. So you get a full new roof put back, right? If you have an older roof, they waived that. Now they can go actual cash value. Where does this become a problem for our buyers, though? What if their whole building burns down, needs a new roof, and they go, well, here's enough to build back 3/4 of it. What shall we do with the rest? So as a lender, we're going to be looking at improving their personal insurance policy so it covers the difference if the condo complex doesn't have to. But should make it easier for some condos to be approved to be warrantable.
That's good.
The other 3 changes all happen in January, and these are pretty big changes. So I'm going to start with the least impactful. Investors are actually going to be allowed to buy in a complex that has more than 50% saturation. So
Oh, wow.
if 100 condos in a complex, 50 are investment, an investor says, I love that as an investment, I'd like to buy it. Sorry, you can't get a loan. Starting January, that same person could buy in that complex.
Interesting.
How does that affect our buyers? Well, it means they're now competing with a bunch of investors where they didn't have to before. So maybe those complexes want a rule that says, no, we don't allow that many investors
Well,
in
I
it.
think a lot of complexes do that rule too,
Yes.
so that's good.
I agree, but the rule for Fannie Freddie says, hey, let investors buy them. If they're becoming decrepit, if they're being run down, let investors come in and rescue those properties because normal first-time buyers can't get in there and help. So
Yeah.
it's actually a positive
That
change.
makes sense.
The other one doesn't affect our buyers, doesn't affect me, doesn't affect sales, but every lender is going to have to do an insurance review every year as long as they hold the loan.
Oh wow.
So it's kind of big because
It affects cost for the bank.
if you're Chase and you have 100,000 complexes to check, maybe you don't want to do that anymore.
You probably can't do a loan on a condo anyways.
It might make them shy away a little bit if they know that
Even more
every
so
year
than
moving. Even more so than now, like you might not want to do that. Bigger banks, it probably affects more. We're a little bank, or medium-sized bank if you want to call us that, but it doesn't bother us. We're happy to do it, and we'll do it every year moving forward.
Even Chase employees have a trouble getting loans on a condo.
If I
Ask me how I know.
if I gave you the list of other lenders' loans I have done, you'd be surprised.
We probably would.
Yeah, I don't think I would.
Yeah.
Yeah, lots of lenders call us for loans, even though they could do it themselves. So
Yeah, or they'll tell you, and they tell you, and you get extension after extension after extension, and
I've seen it.
then I finally say, look, you gotta be honest with your client.
Yes, I'm
And
closing
they'll say,
one.
"Okay, can't do it."
I'm closing one next Tuesday that was in contract since March. So just fighting the fight with their lender,
So frustrating.
Wow.
hoping to get it done. They
Wow.
came over and said, I need a rescue. I was supposed to close 4 weeks ago.
So frustrating.
So they can be done. I'm gonna break the worst one to you. It's so bad.
That's the worst for that.
I did leave the worst for last because it creates the most opportunity for us in this room, right? Because you are going to list condos. You're going to start listing them to tomorrow. You're going to start talking to the associations that you list, right? And you're going to start telling them how they can fix all their problems before January 1st of next year. And it makes you the most important person in the room, and it makes you their hero, which means you get all the listings and you get all the buyers, and that means I get all the loans. So it's really good for all of us in this room. Buyers out there, it's going to impact huge. The reserve requirement for every condo complex to be warrantable is going to go from 10% of your total budget to 15% of your total budget. This is a huge impact. And I can tell you it's going to impact buyers because their HOA fees are going to be higher. It's going to impact being able to sell because some condo associations are going to say, I'm not going to do that. We're just not raising our reserves. We're not the slave to Fannie Mae and Freddie Mac. Except for they kind of are, because they won't have sales in there if they don't have loans to do. So, easy for us. We don't care about the reserves. We don't care about the requirement. But Fannie Freddie, it's going to impact every single complex. So, get out there, spread the word, tell them all they need to start their budget for 2027 now, and have 15% of their total income going into reserves.
That's crazy.
That's a huge jump. I know you think 10 to 15%, but in actuality, that's a 50% jump.
It's a 50%
that's
jump.
A huge amount.
Now, HOA fees might not go up 50%,
Right.
but
No.
it's going to impact HOA fees across the board for
Oh,
sure.
100%.
So what about with the spot, or not spot condos? What do we call them?
Freestanding?
No, it's like when it's, is it called a spot condo? When it's like not a full condominium community, it doesn't, like the HOA fees don't cover the whole
Exterior?
Building. They don't cover the individual homes.
Oh, so yeah.
They're freestanding and they don't cover the individual homes.
Yeah, typically
Isn't that a
freestanding.
spot?
No, I don't think they call them a spot. I just call them a freestanding condo.
Okay.
Freestanding condo have all kinds of different rules, even for FHA. So as long as the total overall complex is more than 50% freestanding, it's considered a single family home. We don't even care. Nobody cares.
Interesting. Okay.
Yep. If it's more, like if they have 10 freestanding homes and 150 condos that are all attached to each other, they still treat it just like a condo complex. You treat it the same way. The owner, the buyer of that, has to get their own insurance to cover their roof, their exterior, their windows, things like that, even if the condo association's mowing their yard.
Right. Okay. Yeah, because we don't have, that's another thing that we're lacking in Central Ohio, is a designation for a patio home.
Yeah, I mean, I don't know that they necessarily, for lending purposes, count them as anything different than just a
Right.
condo.
Well, like for our purposes, it would be nice if we could differentiate between, you know, the patio homes of the world. So like where Epcon calls theirs freestanding homes, or single family freestanding homes, then we have to call ours a condo because we're in Berlin Township.
Gotcha.
So it would be nice to just designate all of those as patio homes.
It would be easier.
I think that would cause more confusion in our industry.
Really?
Well, right? If you don't know if it's a condo or not a condo and you call it a patio home, you're like, well, is it a condo or is it a home?
Everybody calls everything a patio home anyways, and they don't even know what that means. To me, it means that it's a freestanding home where the maintenance is provided on the grounds.
I've seen it called on attached ones though, where it's the ranch style two unit attached with the garages in the middle.
Yep.
And I've seen them those have been called patio homes as
And
well in
Those
some
are not
situations.
patio
And I know they're not. It's just it's insane to me.
And I've seen people call anything that doesn't have a basement but does have a patio home. So there's no basement, it's a patio home. You go, okay. I
Oh.
don't think that's what that means.
I don't think that's what that means
Yeah.
either. Yeah, to
It's
me,
just
it
it's just a
means
freestanding house on a slab.
Yes.
What are you talking about?
Yeah. That's the line from Princess Bride. I don't think that word means what you think it means.
Oh my.
So, and you do lots of other types of loans too, so you can do pretty much any type of loan. You also do a good bridge loan,
Yep, good
that sort of stuff too.
good bridge, we do home equity bridges, we do fixed rate bridges, we do every other kind of loan that every other lender does, Fannie Mae, Freddie Mac, conforming, all of that. Land loans, reno loans, full construction loans, like we really have the full package, I think.
What is the
OPA?
You just said it. No, the like investor loan, the DSCR or something.
So DSCR is the one loan we don't do.
Okay.
And when my associates say, "Oh, we have DSCR," I say, "Oh, we don't do liar loans," because what it does is it ignores the global debt to income. So you could have a business and you could lose money on your business, but as long as the property you're buying can cash flow with the loan you're getting, they say that DSCR loan is good.
And I wondered what the difference was between that and a regular investment loan, because I've had a few investors lately that are doing that type of loan, and I kind of wondered what that was all about.
Yeah, I think that
Because I was not familiar with that loan type.
if they could, they would probably come to me and do a regular investor loan, but I don't think their taxes allow them to. Now, you can say, hey, this is great. I love my investors to make a bunch of money, but I always say, hey, I have to pay taxes. You should too. So, to me, we don't offer them because we don't think that it's a very fair way to do lending.
Hey, they come to me with those loan types. There's nothing I can do.
I'm not putting blame on you. You just close deals. Get
They
deals
come to
done.
me and I already have people involved, so I have no idea what they're doing.
There are very good lenders that offer DSCR loans. And you could use a DSCR if you didn't want to provide your 700-page tax return. You know, you could use a DSCR loan if just for many, many reasons you could use it. We don't do them because we like to see the taxes and see that they globally can qualify for the loan.
Yeah,
Makes
you don't
sense.
want to do that whole just state your income kind of deal that we.
Those
used
were
to
good
do
years.
back in the- I mean, the aftermath was not so hot, but
It wasn't great, but those years before 2008 were pretty darn good.
when everybody should own a home, we were told, but not
That's-
everyone should own a home.
No.
Not everyone should own a home, for many reasons.
So can you explain, I'm sure there's some people listening that may not know the difference between the warrantable and non-warrantable, and that portfolio loan
Yeah,
versus
that's a great
a
question.
conventional.
I think I say portfolio loan to a lot of people and they go, but they really don't know what I'm talking about.
I do the same thing as well, and I'm like, they're keeping it in-house. It's conforming to their standards in-house.
So we keep every one of our loans except for government loans
Mhm.
in-house. We service them all. But when we go out to get a Fannie Mae or Freddie Mac loan, we meet their guidelines and then they will give us the money to lend, or we lend the money and then they replace that money so we can do more loans. So most banks, most brokers, lenders are all going out and getting money from somewhere else. If I do an FHA loan, USDA loan, VA loan, I'm going to each one of those departments in the government and saying, give me the money so I can lend the money according to your standards and guidelines. Sometimes people just don't fit or properties just don't fit. That's when we go to the vault in the bank and we take our own money out and we say, we're going to write our own rules and we're going to lend this money to you. And that's what we do. That's what a portfolio loan means. So super simple, my money, my rules.
Yeah.
Yeah. And we can make up some great rules.
That's why he's the condo guy. I'm
That's
just
it.
saying,
Yes.
condos were tricky before. They're only going to get trickier,
They really are.
and he gets to write the rules. So.
Much trickier, and yeah, they predict we're probably going to up our non-warrantable condo loans by about 40% over the next year,
Oh wow,
and that's huge. I mean,
that's a huge jump.
It's a chunk of the market, and nobody else is doing this type of lending, so it's really big for us.
Yeah, they're really not. But people think they are.
Did I say the words First Financial Bank? Because I don't think I've actually dropped that in there. I
I
mean,
think I have.
She did.
Okay.
Yeah, you drop it. Go ahead and drop
Yeah.
it. Drop it like it's hot.
Brian Hitchcock, First Financial Bank.
What were you gonna say? We were just gonna
I was just saying, we will sign off with all of your
Right.
info. We'll put it
Okay.
on the screen and everything.
Well, by we mean Marla.
Yeah, Marla. Marla, you got that right.
Thanks, Marla. I appreciate it.
So, thanks for joining us today. It's always great to have you, and I can't believe it's been so long since we've had you on.
I'll be back again soon then.
I appreciate that. But we appreciate everything you do for us as far as condos go and other pickles we've gotten out of.
I love it.
So appreciate it. But do you want to? So first, if you're looking to purchase a condo, you call us.
Yes.
Then you call him. But
Yes.
You want to go ahead and give your contact information.
Well, they will direct traffic very well. It is great. But everything ties to my phone number, 614-260-5537. If they want to apply, go to www.614-260-5537.com. So real easy to get to me. But talk to Shannon first. She'll guide you the right direction, and I'll probably be hearing from you shortly thereafter.
All right. Well, thanks for joining us.
Thanks for having
Again,
me.
Brian Hitchcock with First Financial, and that's probably like the third time I've said that.
I love it. I love it.
Thanks for joining us. And as always,
Remember to like, comment, subscribe, and hit that notification bell at Shannon Grimm Realtor and at 614 Real Estate Nerds.